What's up, YouTube fam? So, why don't I use indicators? Why am I bashing on them? I'm just kidding. I'm not bashing on indicators. I'm just trying to show you that you really don't need them. First of all, if you're profitable with them and that's what you mainly use for your strategy, you could just straight up hop off this video because you're making money, right? But I wanted to share my experience with using them. If you're just starting out and you think you need some magic indicators, blah blah blah, no, there's no magic, man. You just got to put the time in and focus on price action, along with the psychology and all the other technicals as well, right? But starting off for me, I thought using an indicator would help me in my analysis and all that good stuff, but it only made things more confusing and more noisy, if anything. Over time, I realized that trading naked charts and analyzing price, volume, price action in certain supply and demand areas was going to be key for me in my strategy and my development over the long run, right? Relying on any indicator wasn't going to do it for me. Oh, these EMAs are crossing. Oh, that means buy, or that means sell. Or the RSI is over 70, that means sell. RSI is below 30, that means buy. No, I've experienced this. If you're starting off, that's not the case. Like in my experience, going the hard route, actually doing the work with the price action order flow and all that good stuff, like will lead you a little further. Anybody could trade using indicators, right? So as a development of a trader, for me, I can't focus on an external concept. I have to get down to the root base, and that's what I'm focusing on. And I kind of want to just share in certain situations where you don't really need an indicator at all, and in certain situations where it could actually get confusing, right? So it'd be better if I hop on the charts and kind of show these examples. So yeah, let's hop right in. Cool, let's jump right in. I have a couple examples laid out with the RSI with this chart I'm about to play out, and another with 50 EMA. Basically reasons where you really don't need the indicator with the RSI and the EMA as well. And with the EMA play, I'm going to show you where it kind of could have got confusing of what the buys should have been in a smaller time frame if you were scalping, right? So let's go ahead with this RSI example. And actually, before we get there, this known concept with the RSI to sell at or below, at or above 70 since it's overbought, and to buy 30 or below because it's oversold, right? But so yeah, let's see what happens with the RSI. You could also tell divergence too, so that might be a little more advanced concept, but I'm gonna show you that you don't really need an RSI to show you divergence because price could tell you in itself. Okay, hourly showing oversold here as well. As we can see, it's crashing into a very discounted demand, almost at equilibrium here, but potentially crashing into more discounted demand down here. So we'll see what happens. So there could be a reason to buy here since it's in demand, right? So we're seeing price reacting off of very low levels and showing an RSI of 30, very, very oversold. So say you were trying to buy here, since there's some bullish reactions. So we're not gonna lie, there's some bullish reactions, right? Think the buyers are coming in and RSI is below 30, so it's oversold. So that means to buy, right? So let's see what happens. Boom, right? Let's keep playing price. Okay, cool. There's a break of structure there, but then there's another crash down, right? And I'm only looking to buy in this area since it's in a higher time frame demand. So I wouldn't have sold up here anyway. So we come to this area, and maybe you're saying, oh, but this is showing divergence. Well, you're not lying, it is, right? Price is making higher lows on the RSI and lower lows and price in itself. So yes, of course, it's showing divergence, but you don't need RSI to show you that. You can see that in price in itself. So just quickly, I could make another video on this, like another day, of how I read divergence and how I see it come throughout in certain zones. But look at this, very bearish price action, right? Look at this volume, very bearish. And look at these lows. Look what happens when price reaches these lows. It reached these lows, and every time it gets near here, there's a lot of wicks, a lot of like exhaustion. When there's not exhaustion, there's a lot of this bearish pressure, right? Once it breaks this low, look how weak that push is. Liquidity grab, and I think this low is taken too. Boom, yeah. So that shows me sellers are not in control of the market. They're actually getting absorbed by the buyers. So there's some change of hands there, and price is diverging. This is a little bit more of an advanced concept without using RSI, because RSI, or MACD could be used as like divergence and stuff like that. But knowing that price is in a high time frame demand and showing that sellers are getting absorbed, you don't need an indicator for this. And watch what happens. This is from a couple weeks ago, so I've already back tested this, and there was great entries in here in the 1 minute, but that's not what we're going over today. And there was another great Wyckoff mitigation play right here, and no indicator is going to tell you where to enter on any of those. And real price, real demand coming into the market, right? No indicator was needed for this. Now let's go into another example. Say you have a scalping strategy where you're using the 50 EMA. Let's see here. So currently price is below the EMA, and when price is below the EMA, it's said to react as a resistance, right? And when it's above, to react as support. So let's see what happens and what this EMA reliance could have got you. As you can see here, it is wicking off the EMA, right? So it's at a key area for the EMA. Let's see what happens. So you see this long wick and a bearish engulfing, and you decide to go short because it's reacting off the EMA really nice, since it's anticipated to act as resistance. A little 2.7R, and let's play price. Boom, clapped. Here's another example. So price is currently below the 50 EMA, and let's see if it could act as resistance. So now it breaks above, and it's actually showing some bullishness, and let's see if we could get a clean play. Okay, you see that it's respected the EMA as support, broken some structure, so let's see if it comes back and does the same thing. So it's on the EMA now, showing a 5-minute engulfing, and you decide to take a buy, showing some rejection, and maybe target there, right? So let's play price. Boom, clapped again, right? So obviously I pinpointed and picked certain examples where this didn't work. There's probably a ton of situations where it did, but using those as a confluence to your bias already would have helped to get better entries and exits. In any strategy, there's going to be a losing setup and obviously winning setups, but I was just showing you with this how in certain areas it could be confusing of what to do. Simply getting rid of it and focusing on the trend in itself would be the way to go about it. This is obviously probably like a bunch of different ways to use the EMA, but having it there for me was a little confusing. And just looking at the chart now, it's straight price action, no noise with the indicator. So yeah, that was real quick of certain examples where you don't even need an indicator, and certain ones I pinpointed and handpicked show you where it didn't work. Obviously in certain strategies it does, but how confusing it could get. You see it wicks, and then it respects it, and then it claps you out, right? So reading price and demand and supply zones and like what it's saying, what it's showing you is going to be really key. And that's what I realized for my journey. And that's why I've kind of just ditched the indicators, at least for now. Like I said, maybe I could use them at some point, but not until I master the price action and get these zones and entries right. and at that point I don't even need an indicator anyway. So yeah, that was my thought process behind it all. And if you're starting out, like I've just shown you, you don't need an indicator, and it's probably best to just master raw price action in itself. Thank you for tuning in. Please like and subscribe if you want to keep up with my journey. I'd really appreciate it. And yeah, see you in the next video.